Hey guys, Sam here, back with you on Monday the 16th. I've got three, I consider them majors, but we'll call them alts. But this is Ripple, Monero, and Dash that I'd like to show you some things that are happening right now. There may be some real opportunity with these coins this week. Now, Ripple, I'm going to start with Ripple because we've got some news likely causing some of this volatility in Ripple. Now, Ripple, you can go over to their website. They have a conference going on today, tomorrow, and Wednesday, the Swell Conference, where you may see volatility being apparent in the market as information data starts to come out of this conference. Many people, myself included, are very bullish on Ripple long term. So this is absolutely one to watch. There's likely they're going to be continued volatility. So let's look at it and see if we can find any opportunity. So this is I'm down on the. Let's go to a larger time frame. Do I have it on a? No, I don't. So let me go to. I'm on the 15, but let's get some perspective on this. So let me go back to a 4-hour. So this has been trading very technically. Right, we had a very nice ABC that completed. Here's that question mark leg that has plagued all many of the majors, as the anticipation was the lower leg. Hard to call this an impulse here. This is a very clear 3. So I think most Elliotticians are operating on the assumption that this is a truncated 5th. But we can look at it and say, well, regardless of how the Elliott academics label it, we can see that this is the start of an impulsive structure. So looking at where we are now, we can carve out a nice 3-wave 1 here. Here's the 2. We've gone up clearly, and we can see a 3-wave impulse into this 3rd wave. We get a nice ABC down here. It goes, again, time and time again, I show this to you. Right between the 618 and the 65 and the Vegas wave. That's the textbook perfect entry. If you did nothing else but trade that, you would be a very successful crypto trader. It happens all over the markets really on every time frame. So there it is, absolutely perfect. ABC, we got price, pattern, time, structure, the Vegas wave, we've got the channel, you got it all there. That's a trade you got to take. So, but if we look at this and we try and put it into context of where we could be going next, well, of course, if we're going to stay with this 5-wave impulsive structure, we're looking for that 5th wave, and we've got targets way above the market. We've got lots of upside potential here. So the anticipation is that we go from this 3rd to the 4th, and now we look for a 5-wave structure to complete the 5th. Now, keep in mind, right? This could just be completing a 1 wave to a 2 to much higher prices, right? We're still. We're still at, we're not even at $1 yet, right? So keep the context in mind of where we are and where we could be going. So my proposal to you is that this is just a 1 wave with much higher prices coming. So definitely one we want to be looking for entries to the long side. Now here on this 4-hour, we can see. I got to take you down to a smaller time frame so you can see it. Okay, so. Here's that 4 low. We get a clean 5-wave structure into what we've got labeled as the 1 high. Here's our 2, right? It was perfect fib structure. You can see it. So here's our low, just shy of the 618. We go right to the 50, right to the 233 Vegas wave. We're right there. Now what we're expecting from here, remember, it's waves within waves. So here's the 1 wave of the 5th wave. Here's the 2nd wave. Here's the 1 wave of the 3rd wave of the 5th wave. Okay, right. So you've got to keep that in mind. It's the fractal nature of the market. It's waves within waves. So this is a fundamental belief system and technical system that allows us to approach the market with this, looking for that relationship to continue. So I'm going to pull this off to the side. That's kind of what we're looking for. So we can come down here and we see, okay, well, here's our 2 wave. So now what are we looking for? We're looking for a 5-wave impulsive structure to form here into the 3rd wave. So we get a 1. We get a nice little 2 that was internal retracement. It goes right to the 50. We get a little ABC, and then we launch. Right. So that's been happening. I'm here on 1 hour. This has just been in the last several hours. We've seen that kind of launch. Now this is important to see here. Now we get the 3 high here. Right up here, just shy of the negative 23.6 of this 618. You see that? We go just shy of it, and we stall there. We start to come down. Now look closely here where we come. Okay, let me blow this up so you can see this a little bit better. Okay, here's our 1 wave. Do you see this right here? I've marked it with this little dashed yellow line. Okay, look at the 4 wave. I promise you that is not coincidental. That does not happen by accident. We go within a tick of overlapping the 1 wave. We don't overlap it. We get the ABC into the 2. Then we start the 3rd wave. Now I've got to go down to even smaller structure to let you see that. So again, for the micro tuning of entries here, you can go down to the 15. I would encourage you not to go below the 15. Right? So here's my 1 high. It's literally within pennies, within a penny or 2, but it does not overlap. Okay, so what's causing that? That's algos, right? And they're also buying at the 618. That's not, John Smith with his little crypto account buying it there on the low. That's only algos have the size and the kind of volume to move that off of that, and they're written to buy it right there so that it doesn't overlap the 1. Okay, so pay attention to that. That's a very hard clue for us. So we see that. So that gives us very good confidence that we have a good structure here. So then we can see we get, this would be this is likely your 3. So we get a little 1, 2, 3, 4. Then we get some subdivision in here in for the 3rd. And now we've got the 5 underway. So if we're looking for the 5th, our expectation is that we're going to see subdivision into the 4th. So we get, it gets a little tricky to see this, but on your own chart, this will be easier for you to kind of replicate this. So here's our little ABC into that 4th wave. Now, what are we looking for? Well, if I open it up a little bit, here's our 4th. So now we're looking for the 5 wave structure into our 5th. Now remember, I'm on the 15-minute here, so I'm looking for 1, 2, 3, 4, 5, right? And scale is not really the point here. It's just looking for that structure. Now, ideally, you'd get a little more subdivision here. I could go down to the 5-minute, but I don't want to set a bad example for you. I would tell you that the tighter the time frame, the more noise, the more you're trading directly against the machines, so you're better to stay on longer time frames. This is just for fine tuning an entry, right? So you can see the subdivision of the wave counts here. Now we do have the possibility because of the speed of this that this is what we'd like to see. So we keep that as a potential roadmap. We'd like to see that kind of subdivision as we move off this low. But because of the speed of this, we've got to allow for the possibility that we could have an A, B, and a C. Let me put the wave on there for that. Just see, you've got to look at the alternate and say, okay, well, what if I'm wrong? Well, what if this count is wrong? This is awfully fast. I'm on 15-minute chart, so this is a couple of hours, and I don't get great subdivision down here on the 15-minute. So we definitely have the possibility here that we've just put in an A wave. If that's the case, then we'd be expecting a B wave to retrace up here anywhere from the 50 to the 786. So we've come to the 50 and wicked it. Now, this count can be invalidated easily here if this low doesn't hold. So that gives you some options here for some low risk entries. So the first option is you could buy it right here on the assumption that we've got this, we're just putting in a 1-2 with a stop here. So you're talking about from 27 cents to 20 to 25 cents, right? So very low risk entries here. Right now it's all relative to the size that you're putting on. But if you just look at it in terms of visually, the risk from here to here, very small, considering we're on a 15-minute chart. So that's an option. The other is to wait and see and get more confirmation that the low is in here based on what happens next. Because we have a very real possibility here that the abruptness of this, think of it this way. Look at the length of time of the 2 wave relative to the 4 wave. Now, it certainly that can happen, but you're looking for more proportion here. So my suggestion is, if you're looking to get long here, if you're comfortable with the low risk, rip right here, if you'll pardon the pun on Ripple, you can be a buyer there with a stop under this. I would not go much beyond that. A stop on the other side of the 65, keeping in mind that you're going to invalidate the 1. It could turn into a diagonal, but that's where you want to reevaluate. So very tight trade right there with very low risk, but with excellent upside. Because if you're a buyer here, just visually, if I look at it this way, if we just go here up to our upside targets here, and our stop is on the 65, well, there's 4 to 1, and that's just the very first targets. We've got targets much higher, but that's definitely a tradable event if you're comfortable with that, because the risk is so low, and very clearly if this is taken out, then this count is invalidated. It has to be something else, and then we wait for more information to reevaluate. Personally, because I don't like how quickly that happened, and the pace, the time here relative to this wave, I'm inclined to wait and see what happens here, because I know, at 30 cents, given where it could go, that there's no reason to hurry here. My view is you never miss a trade. You just get more information, so you're trading the next retracement, but you're trading with a little more confidence. So I like to say, you wait for your pitch. You have certain trades and certain setups that are your go-to trades, and you wait for them. Because you could certainly wait for this to get more clarity here, see what happens here as we come up to the 618, if we get there, because this, nothing says it keeps going higher. This could rip down here, invalidate the count. Then we got to sit on the sidelines and wait for more structure to develop so that we can get a better entry with more conviction in terms of what we think is the likely roadmap. Right now, this remains the likely roadmap, and the clue being the wave 1 high is not violated there. So you might wait. You could certainly wait for more structure here to wait for the 1 wave. Remember, it's waves within waves. So if this is going to, sorry guys. Yeah, there we go. If this is going to stay impulsive, then we're looking for the 1 wave, right? So here's the other count. So these counts are it's a battle to see who wins here, right? Are we going to go into a 1, 2? Or into an ABC and potentially much lower, looking for this fib draw from high to low to go to that negative 23. That changes the count, but right now you don't know which of these is going to win. Now, your bias is, if your bias is bullish, you can trade off of the impulsive structure, because that's what the odds say right now. But you can't say with any certainty that we're there yet, but you can put on a low risk trade there. Right, so kind of trader's choice as to whether or not you want to roll the dice on whether or not this goes impulsive and you get the 1, 2. You want to be more conservative, wait for the 1 and take the next retracement. Right now, this is all just happening really quickly, and we're on a 15-minute chart. So you got a lot of volatility here, and my suggestion to you is use the 15 only for fine-tuning entries, defer to the longer time frames, and that gives you some context as to where it might go. Right now, unclear, but absolutely one to have on your radar. Okay, so that's I'm at 13 minutes. Let me go over to Monero. Now, another good example here. It's been I'm on the 1 hour here, so let's go out to the 4. Get some context. Where have we been? Well, we can look here and see we did get this very nice ABC, and where. It's funny. Where does it go? Right between the 618 and the 65, right? That's the C low. Okay? So we get a nice clean ABC. That's what we like to see. So, but now we've been in this long sideways structure. So what can we say definitively? We are still within an internal retracement of this move here, but we're also within an internal retracement of this move here. So we've got conflicting structure. So, bias to the long side, we're looking for opportunities to get long. This descending triangle finally breaks here. We had this long support that held, throughout this entire time period, and now we get a breakout. So what are we looking for? We're looking for a 5-wave sequence. So let's go down to the 1 hour. Well, this was encouraging, but you've got the same kind of situation here. Look how abruptly, if this is our 1 wave, look how abruptly this 2 wave is in, and this ABC does not have good structure. So what can we see? We can see a 3-wave structure. We can see a 3-wave structure going back the other way. So remember, it's always a battle between the fibs from each swing. So we've gone to the 50, right, which would be, very real possibility that all we're doing here is putting in an ABC. So there's the A, there's the B, C potentially down to this negative 23. It's still valid. If this is a 1 wave, we know a 2 can go to the 786. Right, so the 2, while we like the fact that the 618 held it, this is a contender. Right, again, no, it's so funny how consistent this is. Look where this goes on the retracement, right? Just like we did in the last one, it goes right to the 618, to the tick. Right, again, it does not happen by accident. That is not John the crypto trader or crypto biz or crypto Yoda or crypto, and that's a machine that does that. Okay, so we know that's a very strong clue, right? So right to the Vegas wave 618, we rip, but we don't rip impulsively, we rip correctively, right? With 3s and 5s. So unless we start to move here now, right? It still can play. Where's my arrow? It still can play. If we hold here and we go to new highs, well, we get some sort of a diagonal, right? We'd get a 1, 2, 3, 4, 5. Can't be impulsive because we've already had the overlap of this swing high. But it can be. Now we've got this labeled as a 1. A diagonal can only be found. A leading diagonal, as this would be, can only be found in a 1 wave or an A wave. That is an Elliott rule. So if that's going to be the 1 wave, what are we looking at here, right? So we're looking for 1, 2, 3. That would be the 1 wave of the 3 wave. Again, the idea behind Elliott, it allows you to quantify what you're seeing and put it into a potential roadmap. Right now, this roadmap says down until this swing is taken, and then I get a 5. Right now, the path that seems most likely, given this ABC corrective structure here, is that we're going down again. But, we're all crypto bulls. We're looking for opportunities to get long. I would tell you that's not a great opportunity as good as it looks off of this low. So the first trade here, this was the first entry here, but you've stalled here. So either you're trailing with a stop, your stop's at break even, or you've taken a little bit of profit. For future entry, you can't trade. Well, you can trade whatever you like, but let me put it this way: I wouldn't take that trade until I get more data. I can see more clearly as to what's happening. Had this 1 wave not been overlapped, I'd be buying the shit out of this right here. If we'd come down here and stalled there, then I know I've got an impulse. Now my 1 wave or my 3rd wave is looking better. The fact that I go into a 3 makes me suspicious of this. So I've got to consider the alternate count. Remember, as an Elliott trader, there's always well, what if I'm wrong? That's the alternate count. What if I'm wrong about my primary count? Then my alternate count plays. That's okay, because we just eliminate one possibility. So if this is going to go deep down here to the 786, I'm fine with that. If I were long here and I get stopped at break even, I'm not. It's just another trade, right? Trades are like buses. There's always another one coming. So if that comes back down here, then I'm buying aggressively here, because what has happened, even if I took a loss or a break even on a scratch trade, look at what happened to my risk reward. If I'm a buyer down here at the 786, assuming that's still a 3rd wave, I've still got a 1, 2. Well, my risk is now much tighter. I mean, I could go down here if I wanted to go all the way, since that's our last support, but there's no need to, because I'm playing for that 786 and that 23 to hold it. So no need to take a lot of risk on that. Now I'm at 14 to 1. So am I sad if it comes down here? No. Right. It's all the secret to this is the money management, the risk reward. How much risk am I taking relative to the potential reward? Right here, if you're a buyer, you can be a buyer here. Stop here. What's my risk profile? It's not bad. First target up here is the negative 23, excuse me, but that's 3.7 to 1. Down here, I've got better odds. I'm at 14 to 1. So, keep it in context, keep it relative. Now this is what do we sit at? What's our price here? We're at $95. So this is a much bigger, more expensive crypto to be trading. It's not like we're over on Ripple trading at 33 cents. Now it's all relative to how much size you put on, right? Of course. But, this is one where you got to be a little bit more conscious of how many dollars you're putting into this and how much of your account you're going to tie up into a more expensive, higher priced, larger market cap crypto. For me, that's, if you didn't buy this and you're not sitting with a stop at break even or a stop at the next swing, not enough data. But it likely to come quickly. Monero, with all the media exposure about this bullshit from Jamie Dimon and all the old school bankers calling Bitcoin a scam and its criminals are using it. I got news for you. Criminals aren't using Bitcoin anymore. They can be tracked. They're using Monero. That's what the criminal activity is using is Monero, because that is truly anonymous. So I'm a long-term bull. I want to get in here, but that's not good enough for me. Right? So keep that in mind. That's just my 2 cents on it. Let's finish up with Dash. Dash. Now, this has been incredibly technical. I did a video over the weekend suggesting this is one of the most beautifully technical cryptos across the entire crypto space. So we've been just waiting, right? So we had this beautiful 5-wave sequence, then the very clear ABC. We've been waiting. Here was the nice big subdivided into 5. Here's the 1. If you did, you can go back and look at the video. It's just from a couple of days ago. I think I posted it on the 15th. So you can look on my channel if you want to get a review on how good this has been going back to, over a year. So I know there's a lot on here. So let me break some of this off and we'll just go through this because there are definitely things to learn here. So this is the swing low for our 1 high. So of course we're looking at that relationship, looking for the 2, ideal. Let me take this up. I've got so much on here. And then I'm going to show you this. Okay, so, all right, basics. Let's go back to basics. Here's our swing low, 1 high, low to high. We go right to the 618 within a few ticks of it, right? That becomes our support. So, again, I don't know how many charts I've shown that to you, but a lot. Okay, so here's A, B. Now we get this long extended C, but it subdivides as you're looking for. It subdivides into a beautiful 5-wave structure. Look, here's our B high. So we get a 1, 2, 3, 4, 5. Okay, very nice subdivision. So we can say with confidence, because we get, if I blow it up for you here, you get a very clean A, B, C into our corrective B. We get a long C. But look at the relationship here. This is again building the case for, it would certainly be enough. It would certainly be enough just off the 618. Right, that's what we're expecting in the 2-wave is the 618, and it goes to it, just shy of a tick or 2. But then we want to look for relationships. How do we know that this 5th is done? Because it could keep going, right? We don't know. I mean, the 618 is a likely spot, but what other evidence can we find there? Well, there's my 1 wave projected from my 4th wave. Okay, most likely relationship there on the 1 wave compared to the 5th wave is 100%. Look how precise that is. I promise you that is not happening by accident. So we get the 100% of wave 1 to wave 5 and the 618 within a dollar, right? So what you've got there is a very, very, very strong pivot. So that's a significant pivot, right? Algos are using it. You and I are using it. What are we expecting next? If this is the 1, I got a good 2. I've got a lot of confidence in my 2. Well, what am I looking for? Well, now I'm looking for my third. But my third on this scale is, I got to put it in context so you can see the potential here. Put the wave on it so you can get a handle on this. Let me go. I got to go to an 8 hour so you can see this. Right. This is what the potential is here. That's why I have this box drawn up here. Those are potential targets for that third wave. So we're down here, trying to find entries around $300. That's up at 540, and that's all I'm doing is, as I've shown you guys before, I'm just looking at the most likely destination for a third wave. If that's my good 2, my likely destination is the most likely between 1618 and 175. That's how I get the box, and I've got the negative 100 from the fib pull here at the 618. So I got a big, nice, juicy cluster up here for a third wave target up around 540. Market's down here at 300. That's a big trade. How do I get in? I want in. Right. Well, if my 2's in, remember we've got a lot of confidence in that 2. Let's go to the 1 hour, see if we can get a handle on it. Okay, so we love our 2 down here. I got to move these when I change the time frame. Okay, I'm going to take the wave off just so I don't overly clutter the chart. Okay, what are we looking for? We're looking for a 5-wave sequence to start the third wave. Here's our 2. Well, we get 1, 2. Here's a nice big 3. But look, this happened over the weekend. We get a deep 4. Deep 4. Well, that doesn't invalidate the count. We don't invalidate the count unless we take out the swing low, and we've got a lot of confidence in this low. Well, let's look at it. So with the overlap of the 1, we know now it's some sort of diagonal, so we have to pull from the absolute low to the high. Okay, I'm losing count now. So where do we go? Right between the 618 and the 65, exactly where you'd expect it to go. Right. Well, I'm going to rephrase that. So the highest probability for a 4 is between the 38 and the 50. When we go that deep, the last stand of support here is between the 618 and the 65. Okay, so it can go that deep, and you expect it to go that deep if we go into a diagonal, which we now can quantify this as a diagonal. A potential, right? It's always potential. Potential diagonal, because we've overlapped the 1 wave. So we've got a 1, 2, 3 deep 4, technically valid, all still good. But a deep 4 says this is a diagonal, which means it's a 1 wave. Because remember what our targets are. Our targets are way, 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 way above. So this can easily be a 1 wave. So assume, so our potential roadmap has a 5 wave up here. Right, so this, let me put the wave on that so you get the picture. Okay, let's put the wave on it. Okay, so diagonal overlaps the 1. So a diagonal can only be in a 1 wave or an A wave, which means that this is potentially setting up for a 1, 2, 3, 4, and we go much higher. Let me change the count on the right. We'll put that in a different color. So now I go back to, I'm trying to make the point here, you get the sense of where we could be going. Right, so now let me blow that up. Right, you see this is our 2, our 3 is up at 800. So this is, we're still just getting started if that's the roadmap. This is just the 1 wave. This has got to go, I ran out of room. This has got to go much, much higher. And this roadmap is playing out beautifully. And we know this market's been responding very technically. So the fact that we get a diagonal here, that's not shocking. That's not unusual. This trend is starting to get established. It can disqualify. Right? If we're going to take out the 2 down here, well, then it ends up being corrective. Because take note, if that's the case, then we get an ABC. It certainly could still be that. We can't say with certainty. You don't get certainty in the market. We get probabilities. So right now, with that low in and all that technical confluence down there, we can have good confidence that this is a meaningful pivot. If that's the case, we're looking for a 1, 2, 3, 4, 5 to complete the 5th of our 1 wave. All right? Does that start to make sense? Do you see how it's waves within waves? So if I take this back down to the 1 hour, and we look at, well, where's our way in? Where's our reasonable risk to reward entry in? Well, we're trying to get the fifth wave here. Here's our 3. We're trying to get the 5th wave here underway. So here's our 1 wave. Where's the likely 2? So we're looking for entry here between the 50 and the 618. Stop on the 6.5, knowing that a 2 wave can go deep. It can go to the 60 or to the 786. That can happen. Happens a lot, as a matter of fact. This is not the prettiest 1 wave I've ever seen. It's a little choppy. That's not great structure, but if you go down to a 15, you can get 5 out of that. You can definitely get, and this is, here you go. This is technical analysis. This is what you do. So you're down to the 15 minute. It's spotty. The volume's not as good here on Kraken, but we can get a 3, 4, 5. Here's my 1. So this is a diagonal, because here's my 1, 2, 3, 4 up for a 1 that plays. So, you see a lot of diagonals in 1s, and you see it a lot in crypto because of the volatility. All right, so here's our 1. We're looking for the 2 right here, knowing it could go deeper, but that's the entry box. And now you're down here looking for some oscillator help. Kind of, it was like that all through the 1. We didn't get, strong movement. We've got choppiness. We've got uncertainty here. So not a lot of help from the oscillators. Ideally, we come a little bit lower. We get the RSI in the load zone, so you've got the energy potential to go from low to high. So, one to absolutely watch. I'd stay on the hourly, looking for this. Okay, knowing, even if you have to take 2 or 3 tries at it, with good money management, the stop is going to be so small compared to the potential of where this can go. If I'm stopped out 2 or 3 times, it doesn't bother me. Now, I've been doing this for a long time, so I'm used to it. I don't let any single trade hurt me. 2, I don't take unusual amounts of risk because I know if I'm stopped out, it's okay. Another trade is coming. The next retracement is coming. It just gives me more information. So I can, if this forms as our 2 wave, well, now I've got all the more confidence that I'm going to see subdivision into this wave. Right? So it's just about, it's a puzzle you're trying to put together in real time without complete information. It's only clear once it completes. So we don't know that this is a 2 wave. We don't know that that's a 1 wave, but that's the potential roadmap. So you put up the potential and you see if it follows it. And if it follows it, you know where the market's going and where it's likely to turn. That's your advantage. That's the only advantage you get in trading. It's just the probability play, and then always, always, always tight on the money management. Always better to get stopped out rather than fight or move your stop because you're vested into seeing your roadmap prove out to be right. Take the stop. You'll thank me 1,000 times. Don't move a stop. Don't do it. Take the stop and just say, okay, market's showing me something. It's just more information. Don't let any one trade get away from you. Putting a stop down here because you think, oh, that low is going to hold, that's the wrong. Don't do that. Don't do that. I mean, even here, just this low here, that's gone to our last stand for support. If this count is going to hold, if that's going to hold, that low is good, right? I mean, we did the 618 here, 618 here. What would you expect to happen here? I mean, if it's going to stay consistent, maybe we go a little bit deep. We go right to the 618. We're already getting a little reaction here at the Vegas wave in the 50. So, it can, if you're waiting for the 618, you can miss the train. It's down to the individual trader. Maybe you take a partial here at the 50 in the Vegas wave, looking to add if it gives you another opportunity down here. Stops below the pivot. That's the smart way to do it because look at your upside. So the risk reward, I promise you, if you do that enough times with good structure, with the kind of price pattern, structure, and time element that I'm trying to teach you, if you do that repeatedly, eventually one of these runs. And then the get well, even if you took 3 stops in a row, the get well trade in terms of where this has the potential to go will well compensate you for being disciplined and taking those small losers. That's the name of the game. That's the name of the game. The best traders in the world. George Soros is famous for saying that he's on his best years had a 50% win rate. It's the risk reward. That's the secret. All right, I've gone too long again. Damn it. 34 minutes. Okay, guys, that's it for today.